When you hear hotel apartments in Dubai, it sounds like a dream investment. A luxury branded tower, guaranteed rental income, no headaches with tenants, and a 5-star lifestyle you can brag about. Developers and brokers pitch it as the ultimate passive income tool. But here is the question: are hotel apartments really the perfect investment? Or are they a financial trap waiting to close on you? Every year, hundreds of buyers jump into hotel apartments expecting hands-off profit. They hear about guaranteed returns of 8, 10, sometimes even 12% and think it's a golden ticket. But many of those promises collapse after the first 3 years when the so-called guarantee runs out. Suddenly the operator says occupancy is down, expenses are up, and your payout shrinks. Reselling becomes harder than you think because buyers want proof of income, not glossy brochures. And because most hotel apartments are classified as commercial property, you can also face 5% VAT on purchase. That means you're not only risking your yield, you're already paying more upfront than with residential units. Take one investor who bought in a branded Business Bay tower in 2019. The pitch was irresistible: an 8% guaranteed yield for 3 years, run by an international hotel brand. For the first 3 years, the payments came in like clockwork. But in year 4, the guarantee expired and real performance fell to 4.5%. Service charge increased, and when he tried to sell, the resale market was really cold. Potential buyers demanded a full income statement, occupancy rates, expense deductions, and most walked away when they saw the real numbers. So what exactly are hotel apartments? Think of them as a hybrid between real estate and hospitality. You buy a unit inside a branded hotel-style building. Instead of finding tenants yourself, you hand it over to the hotel operator. They rent it to guests like a normal hotel room. At the end of the quarter or year, the operator gives you a share of the revenue, usually in the 6 to 7% net yield range if things go well. It's attractive because it promises passive income. No tenant headaches, no management calls, no furniture issues. But unlike normal apartments, you can't just switch managers if you're unhappy with existing one. You are locked into one operator for as long as they run the property. And most importantly, your returns depend on real tourism demand, not just marketing slides. Let's talk numbers. According to Colliers and STR reports, Dubai hotels achieved occupancy of about 77% in 2024, with average yield stabilizing around 6%. That's a realistic baseline. If a project offers you 6 to 7%, it makes sense. If it's promising 10% or more, be suspicious. In many cases, developers simply bake those payouts into the sales price, paying you back your own money for the first few years. Also, always ask, are the payouts quarterly, semi-annual or annual? Are they net or after expenses or gross before deduction? Without that clarity, your guaranteed return may look very different in practice. And don't forget resale. Unlike residential apartments where you can sell to end users, hotel apartments only appeal to investors, and they will demand financial reports before making an offer. Another key point: a lot of buyers of hotel apartments think that they can stay themselves in their hotel room for as long as they can while in Dubai. But that's not true. Majority of developers have a limit for personal stay of the owner of around up to months. And that's a surprise for a lot of investors who thought that they could live as long as they can. Finally, the tax angle. Many hotel apartments are registered as commercial property, which means 5% VAT on the purchase price and a small hassle connected to it. Residential off-plan is usually exempt of VAT. Hotel apartments aren't. That alone shifts your break-even point. So are hotel apartments passive income or financial trap? The truth is, they can work if you buy into a strong global brand like Marriott, Hilton or Accor with proven operating history, realistic yields and a transparent contract. But if you buy on hype with double-digit guarantees and no track record, you risk getting stuck in a low-yield trap with limited resale options. If you want to check a specific hotel apartment deal before committing, book a call with our Whiteville specialists. We'll analyze the operator's track record, compare promised versus real yields from past projects, and show you whether the numbers actually work. Link is in the description.